Hello and welcome back to mentfx. We're going to start off this video by quickly saying that this is the only website that I will ever offer any services on, right? This is the only way you can join the mentorship, and it's going to be through a card number. This has been live for a long time. I'm just doing this to allow you guys to understand this is the only way. I will never ask you for money through any other account because there are people that are scamming, that are trying to beat me on like Telegram and stuff like that. Even on YouTube, they have fake accounts. So this is the only place that I'll ever ask you for anything. So keep this URL saved, whatever you want to do, or don't, just keep watching the videos, whatever you want to do. Just know that if you pay and you join, you will have access to this Discord, this entire Discord, with all these areas where we talk, share ideas, share questions, backtest, share course content, private content, and have webinars each week. This is where you get any of that, and you have access to me. This is the only place you'll have that. So in this video, I kind of wanted to look at a few things actually about some of the things that surpassed this week. Despite the fact that the week has been, I guess, for some people considered semi-slow, we have been able to catch some beautiful things. And also, it will allow me to not only show you guys great setups using just normal Wyckoff, but also show you setups that we used and caught using straight and strict structure, right? So nothing more than just the order block creation, stuff like that, to catch very smaller based RRs, which allowed for very small scalps. So if you actually were in the group, then a lot of you have seen that despite the fact that we didn't catch anything too crazy, except for like, I think the Euro odd trade was absolutely beautiful. And then we had the re-entries yesterday or today, and the Euro USD trade today. Other than that, everything else I caught this week was very small RR, and it was scalp based off of the 1 minute, 30 second, even 15 second time frames. However, within the concepts that we teach and that we employ at mentfx and on the YouTube channel. So the reason that I wanted to bring that up and just put it out there that, you know, we caught a lot of stuff this week, whether it was in a very high RR nature, like 1 to 17, 1 to 14, right? Some great RRs, or whether it was something that was much simpler, like a 1 to 3, 1 to 4 off of a 30-second, 1 minute chart, you know, using majors, of course, so spread did not matter. Don't think about that too much. Recognize that every movement is the same across all time frames since price is fractal. The reason I wanted to talk about this is because I wanted to show you guys that your smart money journey is going to be different than mine, even if you're learning from me. And there's no better place to see that than the people in the mentorship that catch things day in, day out, that are different to the actual plays that I catch. Not always, sometimes they're very similar. But you have people that catch absolutely beautiful trades, and I mean they share a lot of stuff here. I'm not going to go through too much of this. I don't want to like I don't want this video to be an advertisement. I want it just to be, you know, a concept rundown and a little bit of help towards all of you and a little bit of motivation. But the most important thing is that there are people that are going to be catching trades that are different from me. There are people that are going to have different entry criteria. And the reason that that is so beautiful, especially in the mentorship or even in the group, is that it shows you guys that there's a ton of ways to be successful trading smart money concepts. And what I mean by that is you're operating under the idea that when price moves and when price prints candles of any sort, they are creating liquidity and inefficiency as the price movement occurs. So whenever there is price movement, you're going to see traces of order blocks that are left, structure blocks that are left. You're going to see traces of inefficiencies, imbalances, and based on the time frame you're looking at or the specific time frames you're looking at, you're going to see different order blocks to other people. You're going to see different structural plays to other people, and you're going to most likely, sometimes, not always, have different directional biases than other people. Now, why is this beautiful and why is it amazing? Well, it's amazing because all of you, or me and somebody else, could have two different entry criteria methods and trade management styles that we use to enter a specific zone on the chart. And as a result, if I am bullish on a chart and someone else is bearish on the chart, we can both be participants and still make money. So if I'm, for instance, a buyer, right? So let's say, just very quickly, this did not happen, but this is for the sake of explanation. Let's say that I had the bias that this was going to continue going significantly higher at these points here, and I was going to perceive bullishness, and I was going to trade under that imperative, right? So we'd maybe have this order block right here outlined, as you can see, this little order block right here, and let's say someone else, right, Billy or you, had this idea that after we had this raid and this order block creation and this move down, we're not going to distribute and keep distributing lower instead, right? So you were right in this case and I was wrong, but What's interesting about this? With my bullish anticipation from this area, when price gets here, what's inside here? Well, you can already see there's a snowflake set up in here. We're not going to look at it too much, but again, if we go on a lower time frame, you can see there's Wyckoff in here. We're not going to look at that right now because it's not important to what I'm trying to explain. But there's a Wyckoff setup inside of here, and inside of here, maybe after this order block or even lower inside here, because what do you know exists in even smaller retracements like this? Again, on the 1 minute or the 5 minute or even lower time frames, there's Wyckoff in that area. So again, in this area right here, there is most likely the move down, the selling climax, the AR, the ST, the ST&B, the spring that taps into the order block, right? The move away, the retest, then the continuation, and then this is the continuation, and then we continue, right? So what's interesting about this is that if I was a buyer at this area, then I could have partialed or taken profits at new structural highs, and new order blocks, right? Like up here that have not been filled yet, and make money on that while you, someone that was selling, either already sold at the order blocks up here or saw some distribution in here and sold the test of the distribution off of this here. So, and then you make money on the down move, taking profit at potentially this order block, taking profit at these lows, and then taking profits at these lows, and then potentially this unfilled order block, right? So despite the fact that you and me, right, or me and somebody else in the mentorship or anyone like that could have had two different directional biases on this entire market, we traded them with our entry criteria, and as a result, both made money on both ends of the market, which is why you cannot think about this as black and white. There is no, it's just bullish or it's bearish. Usually there could be an identification that makes it more bullish than it is more bearish, right? That can happen. However, as long as you have entry criteria that operates under the arsenal that you've been provided, whether that's order block creation, imbalance fill, inefficiency fill, momentum, divergence using different correlated pairs, Wyckoff, redistribution, reaccumulation, fractal redistribution, whatever it may be, as long as you're operating under a certain thing that you have stuck to and trade it, you can make money doing that, right? So I'm not saying that you will make money, but I'm saying that if you properly employ these things, you technically should be able to make money. I'm not going to put any absolutes down because I don't want to be sued by any of you. So, so we're going to keep it at that pretty much. But ultimately, the beautiful thing about smart money that a lot of people fail to recognize is that whether you're a buyer or a seller in a market, you can make money on both ends, understanding how smart money needs to mitigate, create liquidity, manipulate that liquidity, mitigate the liquidity manipulation, and then continue in a given direction. So with that, let's jump into some of the trades that we took this week. We can, of course, go over when we sent them out and stuff. That's fine. We had many people that caught this trade right here, actually both ends of it. So if we just boil this down a little bit, we'll talk about it in a second. I caught this mini little scalp before the real trade happened. Then we caught the real trade. And as you can see, there were two opportunities to get in. One was right here at the actual test, and one was a little bit higher. And we're going to take a look at this in a second. And we're just going to kind of break it down just a little bit for all of you to understand what's going on. We're not going to break down everything specifically, such as the mentfx block and the mentfx block that we used here, because that is reserved for the private mentorship. But that's not to say that any of you that have been watching my videos can't do enough with everything you've been given, right? A lot of you can become profitable and successful if you dedicate and put the correct time in to understanding why these movements in the market occur. Okay, let me just make sure this is recording. Yeah, it is. Okay, fantastic. So let's speak a little bit of what happened, a little bit of what trespassed in the last week or so. So as you all know, we've been in a very bullish market on Euro US dollar. And during this bullishness, we've been able to catch tons of opportunities in this bullish move, specifically on, I believe, GU. So GU also had a very similar bullish move here. And because the EU was a little bit uglier, so that's not to say that we didn't catch beautiful stuff in here. Just because it was a little bit uglier, we were watching more of the GU. However, you had good opportunities on EU as well. Now, we had this upstructure, and then of course we had that shift, and now we're having basically bearish momentum being sent into the market. But because the market is fractal and we understand that, we know that this could just be a bigger pullback on a higher time frame. So for instance, as you all understand, structurally we move like this. So I'm not going to get too far into it. Structurally we move like this on any time frame, right? But within these structural moves, there are going to be there's going to be inside structure that is bullish and then becomes bearish for a long time until it becomes bullish again. But that bearish structure is part of a bullish structure. So as a result, It's just a bigger pullback. So this could be exactly that before we actually have a move that continues beyond liquidity up top. But that's not important for us right now. All we need to do is consider that and understand that. We're going to go over this a little bit more in the webinar call this weekend in the mentorship. But right now, just understand that, you know, structure is corrective and does not have to hold on all time frames because it has to create liquidity, manipulate that liquidity, and then continue in certain directions. So what we had here is we basically continued lower and lower, and I believe we were looking for sells here at some point, and we caught some sells off of this, mitigated them properly, managed that trade properly, partial, and then might have gotten broken even, which is fine. Absolutely, it's absolutely fine, no big deal. But what's interesting is as we had this, we also left behind multiple order blocks that we counted as our areas of interest. And these areas of interest, so again, let's just go out like this. These areas of interest functioned as the order blocks that we left behind, right? So there's down move before the up move, counted as an order block. Now you'll see that that technically didn't hold, but what you'll also see is this is a 4-hour chart and it was mitigated here. And this is the movement you had that came up to mitigate into a new order block before going lower. So again, this right here on its own should show you this idea of being a buyer and a seller in this market and still making money if you're employing the proper usage of the arsenal of tools that you've been given over the last few months or even in the mentorship. Okay, so price does tap into this order block, mitigates it, most likely gives us a great opportunity inside of here on a lower time frame, such as maybe a 5-minute, right? So if we just move over, you can see that. Yeah, like we just spoke about, there's some kind of Wyckoff in here. You might have been able to be a participant on this order block, on this OB 2.0, maybe on this OB 2.0 here, OB 2.0, and so on and so forth. And you could have made money on all these movements, but we're not going to talk about that right now because that's not where we were interested in being buyers, right? The buy that we actually had was just about yesterday or so, and it's been playing out perfectly. So as a result, we had price playing out as so, and we had this move down that came to tap into an order block that I had denoted right here. So if I show you, here's that order block, right? And if now we get lower, so again, the idea of the fractal timeframes is understanding that you can have order blocks on multiple timeframes. What do you see here? So again, let's go back to our older videos and consider the snowflake rule. We have a snowflake forming an accumulation here that, if you notice, really hasn't had a test, right? So for instance, if we wanted to mark this out properly, right, we either have a preliminary support here. So here we go. We have a preliminary support here or here, either one. What you have to recognize, the preliminary support is usually, what is it on a lower time frame? A fractal redistribution. We're not going to talk about that right now, but if you went inside here on a lower time frame, you'd probably see that, or even inside here, right? Preliminary support, you have your selling climax, which is formed after we have the liquidation of these areas, and now you're starting to have real retail or emotional people stepping into the market trying to sell, right? And what happens? Trying to sell. We come up, we liquidate some of those, give them a little bit of fear, get more people into the market because structure is holding. So for retail, this is now structure, and they're trying to see the structure hold and trying to get lower and lower and lower, right? Then we have the ST, right? The ST is creating what now? Well, you can see where these lows are created. They're starting to create equal lows, right? What are equal lows for retail? Again, they're starting to see this. They're saying, okay, maybe we're in a consolidation now. We should wait. Or maybe it's a bullish flag pattern, whatever it may be. Retail has a lot of ways that they can use to get themselves liquidated, right? That's the beautiful thing. Retail has so many beautiful concepts that can get liquidated that we don't even have to think about it too much. Just consider the fact that liquidity is being created. So we've created a bunch of liquidity. Emotional people are getting involved. As we've spoken about before, what's under this liquidity? Why are we doing this? What are we building? Right? This is an hourly chart, but again, this looks, if you remember any of the previous videos, this looks like a 5-minute or a 1-minute distribution, or even accumulation, or even a 30-second accumulation that I've shown you in the past, because the market is fractal. If I just hid these timeframes from you for just a second, you'd notice that you wouldn't even be able to tell what time frame this is unless you were looking at maybe, the prices on the right, because all the time frames move similarly if you understand what you're looking for. So we have this selling climax, this automatic rally, the secondary test, and you can see that we then make a high that takes out all the highs that are here currently. So what does that do? That makes all these people that are selling, that are believing it's going to sell, now start to believe that, wait, we're holding, we're going higher, we're breaking higher, right? So this has to be a new impulse leg to now continue the up pattern, right? So what's happening? Well, now people are again getting into buys. This push right here on a fractal time frame, right? So this is an hourly time frame. Again, consider the price action inside there on a much lower time frame, like a 15-minute or a 5-minute. what's happening to retail in there? Well, they're seeing that price is doing this, breaking above highs, breaking above highs, breaking above highs, looking for what? Continuations. And when they're buying, they're placing a bunch of stop losses here, and most importantly, stop losses right here, right? Tons of stop losses right here. So again, forget the fact that this is an hourly chart. It doesn't really matter. The fact it's an hourly chart means that there's even more orders than we can even imagine at these areas, right? So when we break above, a lot of people are getting into it again, right? And this counts as our sign of strength. So what's happening is it's a sign of strength that is basically meant to manipulate. Then we have the move down that liquidates these people and creates that STNB, right? Now again, over the next 2 hours, we have this push up that takes out people, again, liquidates them. As we've spoken about in the past, you can start thinking about this as a form of an order block continuation. This move comes up, takes those people out with an order block continuation, retail side order block continuation, right? The idea is, yes, there are order blocks all over the place, but if you don't understand how to find the most important order blocks, or the order blocks that have real meaning in terms of whether they were part of an accumulation distribution or part of an actual liquidation play, then your order block trading is not going to be anything. Right? It's just going to go to shit, because you might have been thinking that all of these areas here are order blocks and the creation of them, which they are, but they are not complete, and they're not the ones that are going to be properly mitigated to give you the real RR that you really want to get, right? So we have this STNB created, right? What is the STNB? So what we're going to do is we're actually going to have a whole video that we're going to make dedicated to Wyckoff. So actually, after Pips of Persian made his few beginner videos on Wyckoff, I got a little bit inspired, and I wanted to make my own little version of that to explain to a lot of my viewers to how I think about Wyckoff and how we look at it. So look forward to a little bit of that in this week or the coming week. Okay, so the STNB gets created. This move up happens. Again, this is an hour time frame, so what's happening on the lower time frames? Again, I'm going to keep saying things that are going to sound repetitive, but the reason we're doing this is to instill these things into your mind. So after some time, when you're watching a video like this, you're not going to have any question about what's actually happening here. You're going to see this, and as this move up is happening, you're already thinking that the lower time frames are doing this, are doing this, are doing this, are doing this, forming trend lines, forming equal lows, forming the idea that we're going to continue higher, getting more people and more people invested, breaking structure, right, on lower time frames, because this is a structural high on a lower time frame, breaking that, making more people think, what if this is what they had, and then this here started doing this and then broke structure, what do you think people are going to do? They're going to start looking or anticipating for these moves. Yeah, you understand what I'm trying to say. For these moves to continue even higher. And that's going to liquidate them even more. And then we finally have the spring, right? And at this point, again, what is happening? We're breaking lows. We're holding highs. We're making trend lines. So again, after the fact, when we look at this, it doesn't look like it, but there are people that are looking at this trying to find the trend line, the phantom trend line, right? Some people are looking at this saying, okay, where's my trend line? This is my phantom trend line that I should be trading, right? They're seeing all these touches with the one manipulation, so they're like, that's the trend line manipulation. We need to get involved now, right? There are people that are watching this in one way or another, emotionally trying to get involved, especially if all they see is this much of price action. This price right here looks like it wants to continue way lower, especially if they might have been seeing something on a lower time frame that shows them there is a flag pattern even inside here, right, to go lower. There's a lot of ways, like I said, that retail can get liquidated. We don't need to think about that, but we need to be cautious and understand that it's occurring, because that's what gives us the basis for how we are going to use footprints of the manipulations to get involved in the future, right? Because what we're doing is we're not trading with the institutions. Well, we kind of are. But what we're doing is we're letting the institutions do their thing and then getting involved with them when they have to come back to mitigate negative positions, which is something else we'll talk about. But that's ultimately what is happening. So we have this spring, and then we have this continuation up. We have this failure to come and test, and this continuation up. And at that point, right here, is when we had this area right here as a point of interest, or an order block that's important to us. Why? It had to move down, and then to move up that never got re-mitigated. So we know that in the future, more likely than not, there is going to be mitigation at this area. Now, what's interesting is you actually do see a little bit of mitigation here. So at that point, I was actually willing to put this a little bit lower because it was an hourly time frame too, to about the 50%. So this is where my POI was, where I was expecting potential buys to take place at. Okay, so price continues higher. then slowly starts to come down. And again, as it's coming down, what's it doing? It's creating those impulsive legs lower. So people that were selling, even if they're smart money, could be getting involved in making money off of the order block plays that form, as you can see. And then we leave this order block here. So that was actually one of our targets today, off of the trade we took. So you'll see that this was actually a target. You can see it's got unfilled. That was an area we were looking at for potential partials or even collapse of our trades, because we are not fully sure about the higher time frames order flow right now. As you can see, it's very back and forth, but that's no big deal right now. Let's get back in on this and think about what's happening. So remember this area right here that acted as a spring. What happened to price? Price came back down into it and gave us that test of that spring. Okay, now what's interesting is we still did not enter this test of the spring, because for us at mentfx, this was not enough confirmation yet. We have multiple ways to look for confirmation. We have the mentfx block that we use, we have Wyckoff that we use, and we have the POIs that we use. And of course, those of you that join the mentorship already know what the mentfx block is. If some of you didn't, you already know what it is based on the way you've looked at charts, right? So it's not hidden. This right here, here we go. Let's zoom out. Let's zoom in. This right here is a mentfx block. You guys can go and study the living shit out of this if you'd like to, and you could learn and understand what it is without getting my mentorship. You do not need to. I'm not trying to sell anything to you, right? The mentorship is there for the people that want to be a part of something that I've created and want to be part of that value, and then have other people that they can rely on. So either way, we tapped this area and we came up. Now, what's interesting is after this tap occurred, we now recognize a few things. We've actually created a higher time frame order block, right? Because what is this down move before this up move? It's a liquidation of prior lows, right? You can see all these lows that got liquidated right here. There you go. All these lows got liquidated. And of course, there were intermediary lows too, like this low right here and this low right here. And again, as I ask you this question, I hope you can start to answer it. What is happening at all these areas? There are people that are looking for continuations higher off these trend lines. People that are looking for continuations higher off this support, off this support. People that are looking for continuations off of this support. So when this doji got created on their 1 hour time frame, right, or this inverted hammer, whatever they call it, they were looking for a continuation. Then this area where they were looking for continuations. Then finally, they might have started to sell because we broke down below every single possible area they could have bought at. So all these areas of previous quote unquote support have now become areas of resistance. And when price comes back up and starts to give them this, what do you think they're doing? They're starting to sell. So what should we be doing? Thinking buy. But we don't even think this way. This is not important. We still got involved using Wyckoff, but you need to understand that that's what's happening inside here. So you know that this move down right here was a liquidation of those people, getting them into positions in sells before we buy them back up. And now we've created a larger time frame order block, right? Let's see if we can find it. 2 hour. 1 hour. Yeah, so it's the best seen on the 1 hour or maybe the 2 hour, but you can see what actually happened. You have all these lows, 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 and that gets liquidated by this one move down that takes them all out, tests our previous accumulation, right? So here's our accumulation right here, as you remember. Tests that accumulation perfectly and continues higher. Now, what are we expecting? The mitigation of that order block. So what's interesting is, remember the last video where we said keep it simple. All you have to do here is, if you want to, find 50% of this, right? 50%, and get involved right there, right? And then start targeting highs, right? You can get a normal 1 to 2, 1 to 3 off this trade using normal smart money. The order block has been formed. There's nothing more to it, right? The order block formed after tapping into your previous area where you were expecting price to tap into after liquidating these areas. At this point, though, we still were not interested in being buyers. We waited for accumulation. Because as we understand, if the price is fractal and we're on a 1 hour chart, then we're most likely going to see price come back inside and start to accumulate. So this is something that I want to draw your attention towards concerning Wyckoff. For a lot of you that are confused between redistributions, reaccumulations, or accumulations and distributions, people constantly ask in the comments, how do you tell the difference? Well, the difference should already be established in your mind. And what I mean by that is we already are anticipating bullish price action on this. So if we start to see Wyckoff, we should already be looking for accumulation-based Wyckoff. And what I mean by that is we should already be looking for the creation of lows, liquidation of them, the creation of lows, liquidation of them, then the breaks up and the continuations. And this is going to be our snowflake, our Wyckoff, right? You can see it here as well. We're going to look at it in a second and dissect it a little bit more, so a lot of you can understand what is actually undergoing with price itself inside of this area, okay? So let's get down a little bit lower and take a look at this trade on its own. I think we actually did this on the 30-minute. I'm not sure. So this is where I'll bring up my actual, we'll bring up our mentorship right here very quickly, and we'll take a look. So this is, of course, the after. And we'll go to the before right now. So the before was sent right here yesterday, 11:55 a.m. EST time, January 28th. You can see all this stuff here. You can see when it was sent, way before price ever tapped into this area. You can see this area we just looked at right here. Price tapped that, came up, created that order block that we just showed you guys off that higher time frame, mitigating that order block by forming an accumulation. Formed the accumulation. Literally, we let it form the accumulation and then went to look to get involved on the order block of that accumulation before we see higher prices being met. Whether those higher prices are met at these order blocks, right, the partials, or even higher if prices wanted to push higher. Because again, we're trading the footprints and the order flow is telling us that it's most likely bullish, but we never know 100%, right? So we were expecting this right here. And a lot of people caught this absolutely perfectly. I'm not going to go and find it right now. I think it was in member trade ideas or trade breakdowns. I think it was somewhere in here. If I just look through it, maybe we can find it. We have people getting a lot of stuff every day. Let's see if we can find it. I think it was somewhere in here. I just want to see if I can see it. Maybe it was in this one. Okay, honestly, I'm not sure where it was, but we were talking about it earlier today, and we were looking at how everybody caught EU, gold, and a bunch of different things. So either way, let's go to that prior picture. As you can see, it's right here. And at that point, you can see price was right about here when that was sent out. So you can see that it has played out indeed perfectly, but that was still not where we got fully involved. So again, people got already involved here, but let's actually talk about what occurred here. So prices came up, and remember from one of the previous videos where we talked about how people confuse themselves with Wyckoff because they look for Wyckoff of the impulse legs that occur instead of every impulse that occurs. So when this impulse here occurred, we instantly thought it could be a selling climax, right? We weren't sure, and we didn't instantly denote it because the thing is, we're never sure until we have something that actually properly plays out. So if you notice, this is actually not that perfect of a schematic. It doesn't look that great. It looks much better on the 15-minute actually. So let's go to the 15-minute, zoom out a little bit, and now, as I show you this, you should have almost no question as to if this is Wyckoff or not, right? A lot of you can start to see it now. You have that selling climax. So again, we're not going to do the whole discussion about the liquidity creation, but now just look at it, right? That selling climax. Follow that up to your automatic rally, creating liquidity. Follow that down to your ST, liquidity. Follow that down to your ST and B, liquidation of that, getting people to sell, right? Coming up, creating trend lines. People are starting to sell. Liquidate them, start to get them to buy, sell through them, liquidate them, creating liquidity the other way around, right? There's liquidity in all areas, as you can see this, right? They're all getting liquidated. Spring, move up, break structure. Sign of strength, another sign of strength that breaks above the automatic rally. Fantastic. The test of that spring. So again, you could have already been a buyer at this test in the spring. So there were already, I don't even know, I think 3 opportunities total that you had to buy. You had the opportunity to buy at the open of this order block after it formed, the 50% of that order block as price tapped into it. So this is, remember, this line right here denotes the 50% of this down move before the up move. That's just normal order block. You could have bought there. You could have waited for Wyckoff and bought off the Springs order block at the open, so right here, or the 50% right here, or at the wick of the final down move right here, right? So you had all those opportunities to buy still, right? If you got none of those, you had this move up, move back down to into this order block, another opportunity to buy, and then you had this move up that created that sign of strength. And at this point, we were now interested in being buyers. So think about how long we waited, or how much price action we allowed to play out before we decided it was worthy for us to get involved on this, right? So what did we say? Let's get involved on this test. So let's look at this area very quickly. Let's just highlight it and imagine that there is an order block actually here. So yes, this is an order block, right? The liquidation of the last lows, right? Last down move before the up move, that's an order block. Fantastic. Let's open this as a POI. Let's drag this out. Let's get onto a lower time frame very quickly. Let's look inside here, right? And you can see, if we look inside this order block, what do you guys see? Well, we have this order block here that got mitigated. This new order block here got mitigated. This new order block here got mitigated. This new order block here never got mitigated, right? So this is the idea of fractal order blocks. They form everywhere. There are going to be prices that are left behind, that are not filled properly, that are not filled efficiently, that leave imbalance, and that have those order block remnants, aka positions, on behalf of the institutional traders that need to be mitigated still before a continuation higher or lower, ultimately, right? So this area we know would be important. That's why at this point we made our order block, not this whole area, but this tiny little area here that acted as our real order block point of interest. So again, at this point, we were good to go for buys. You could have been a buyer at this area already, no problem. Or you could have waited like me. So what's interesting is I actually caught 2 trades off of this. And I'll show you guys how I did that in a second. But we had price come down. We had price come down into this area. At this point, I was interested in being a buyer. So actually, I think it was right here. So this is a very miniature scalp. But again, this is going to be important to explain to you guys why this tiny 1.69 RR position is actually a very important thing for a lot of you to get. So again, as you can see, there is a mentfx block in here that we decided to trade off of this, and it worked out perfectly. If anything, this trade actually ran a total of 1 to 3.77 before, oh yeah, about 3.92 before it started to actually lose. But I collapsed it just at this point, because at this point, when price came here, so let's actually go back to the Discord very quickly, where we sent some of this stuff out. As price came here, I was already expecting for this to occur. So you can see that the Wyckoff didn't have to show me which way price was going to go. I was already expecting Wyckoff in a given direction at this point, right? So you have the selling climax, the automatic rally, the ST. I was looking for the SND, the spring that comes into the 50% of this order block, the move away, and the continuations up that we could actually get involved on. Now, instead, when here we go. When price came inside here, instead of giving me, so this was that selling climax, the AR, the ST, and I was looking for what? The continuation lower, ST&B, spring, and then the continuation up. Instead of giving me that, what you'll notice is it actually gave me, I think it was on a 30-second. Let's go find it really quickly. So again, forgive that it looks a little bit crappier now. Let's zoom back in, right? Off the 30-second, I think. Yeah, here we go. So off the 30-second, what did it give me? Well, it gave me a mini fractal accumulation that I saw. It gave me this break above all structure, giving me a sign of strength on a fractal accumulation, and I got involved at the mentfx block at this area, right? So it's basically just an order block. We got involved here, and where did I instantly collapse my position? I collapsed my entire position off of a 1.3 pip stop loss and a 2.2 pip take profit, because remember, this is Euro US dollar. This spread on this pair at the time of this trade was 0.0 pips. It was 0 pips entirely, 0 pipettes. I think it went to 0.1, so that's 1 pipette, that's 1/10 of a pip. So it did not affect this, right? That would mean that I'd be risking 1.3 to make 2.1 instead of 2.2. But the idea here is this is the exact same as a 1 hour time frame entry that gives you a setup of 130 pip stop loss with a 220 pip take profit, or like 13 pip stop loss with a 22 pip take profit. It's the same thing. Don't confuse yourself with the fact these numbers are so little, right? So at this point, I did get involved on a small structural play because I was making structural plays the entire week on some currencies, and this was something that I caught, and it was collapsed at this point exactly, right? So you can see that right here. We're not gonna go through all of them, but we took a small position, closed in the small trade. Again, it was a very small RR, but the thing you need to recognize is there are multiple ways that you can be involved in the market, and as long as you understand that not every trade you take is going to be 30, 40, 20, 17 RR, and some are going to be partial, that 2 RR, 3 RR, and some are even going to be collapsed because you understand how structurally price can move at like 1.69 RR, that's what's going to make you a successful trader, not catching huge RR. What's going to make you a successful trader is understanding why price will do certain things in certain entry criteria that you have preset for yourself. Okay, fantastic. So instead, what happened? Price ended up coming back down into that area. So you see that if I did hold this position, it would actually have lost, right? But if you actually took the original buy at this order block, you see that it would have been a fantastic, fantastic trade. That would have taken you much higher. So that right here, so that right there was my little scalp before the real trade happened, which was tapped into right here. And what's funny is a lot of us, me included, were not included in this trade right here. So some people had taken this because, you know, this was in line with the previous order block, with the test of it, just about 50% of it, if we actually want to look at this. So as you can see, there's a 50%. You can see where it hit. It was perfectly on the 50%. That's the reason for that move. So it's just the last down move before the up move that got tapped into right there, right? And people were still not involved on this. But what did we wait for? Well, let's look at this because we understand everything's fractal. What's actually going on here, right? Let's get rid of this watch list. I'm sorry, that's in the way. Again, what do you see here? The same thing we spoke about in the beginning of this video. There's an accumulation here, okay? It's an ugly one, but there is an accumulation here. And you can go and spot this on your own now, or you can see it. I'm not gonna draw it all out because we're kind of running out of time right now. Either get on the 1 minute or something like that, because remember, an accumulation that looks like, or price action that looks crappy on a 5 minute could look like beautiful, like music to the ears accumulation on another, right? So sun climax, AR, ST, sign of strength, STB, spring, continuation, tests, or so on and so forth. Either way, at this point, we had this occur. We already had the buy technical opportunity occur. And from there on out, we formed this last down move, right? Before the up move, right? So what is this? This is an order block, right? So let's get to a 15-minute and think about what's actually happening here. We have lows created. Those lows get liquidated. So let's think about this. Just again, all these things that we saw before, what do we have? We have lows, lows. The lows get liquidated, right? This takes out those people, continues higher, comes back to test it, and then takes off. And that's the opportunity that we were able to catch on EURUSD in the last day of this week, pretty much. So it comes into this. So again, what is this actually based on? How much stuff is going into this? It's based on a prior accumulation that got tapped into at the test that we still didn't get involved in, but you could have, that created an order block off that test, that created another accumulation within the mitigation and test of that order block, that created a new accumulation that gave you a test, that created a mini order block that gave you a new move into that created another reaccumulation, which created another order block into that test of the order block that then came off it and then came to mitigate it one last time before the actual move happened to that previous area of an order block that we were expecting price to get mitigated at. Whew. So I hope you see how deep your smart money can go and how simple you technically could keep it. So, you know, we just came out with a video talking about how easy or how simple you can keep this, and now this is going to be a video about how complex you can make it, right? There is so much refinement that you can do on one given time frame. The deepness you can get into one time frame is absolutely astronomical, right? It's like fucking space. Honestly, you can get to the 5 seconds and look for those 5-second accumulations or 15 seconds accumulations like we did on GU like last week, as I showed you guys in the video. There are so many opportunities and things that you can do on one currency pair that it's kind of insane to think about. I think it's absolutely beautiful. I think it's one of the coolest things ever. So either way, we had this mini time frame accumulation happen here. The order block created. We're not going to talk about the mentfx block in here because we actually got the entry off of the mentfx block right here, right? We had to tap into that. So again, you can follow this if you want. Order block created, tap into that. New OB 2.0 created, tap into that. New OB 2.0 created. Did it tap into it? Yeah, tapped into it right here. New OB 2.0 created, tapped into it here. So you could have followed this all the way up on the markup, right? So you don't just have to trade the accumulations like we've spoken about in the past. You can trade the markups. And within those markups on lower time frames, you're going to see accumulations in here. You're going to see accumulations in here and so on and so forth until we had that area met. Now, at this point, you should have either partialed and you should be at break even no matter what. You should have actually been at break even after we were actually at break even, I believe, after this high got hit, right? So structurally, we moved up, broke highs. Price should never come back down to this area now. So we were broken even here and aiming for this as partials. You know, partials were met at 1 to 17, aka, what is that? If you met it at 50%, that's about 8 or 7.5 RR, right? I think. Am I done with my math? 17 divided by 2. You know what? My math is off right now. I think it's like 8.5. Yeah, I hope it is. Otherwise, it looked really dumb. But we came up, we tapped into that, we got the partials, and now what can we do? Well, now because we're unsure about the actual higher time frame, there's a few things that this market can do. It can continue much higher to make new highs, right? And if it did, that same trade that was 1 to 17 can go up to these order blocks here, which is 1 to 32, can go to this order block here, which is 1 to 50, can go to these imbalances here, which is 1 to 64, or can go and make new daily highs, which will be 1 to 77. So this is how high RRs are met. High RRs are not met off every trade that you take. High RRs are met off of trades that you take, small profits that you take off the table, and then finally the proper institutional footprint entry that gets you into those moves that go to meet new highs, new order blocks that are sitting much higher, and inefficiency fills that are sitting much higher. So I hope this breakdown of just one trade and how in depth you can make a certain entry helped a lot of you see that there is a very, very, very deep aspect to trading if you want there to be one. Or there's also a simple one based on that gold video you saw last week where we just drew out the order block and caught it normally, right? This same trade off of that same normal order block. So let's zoom in on this again. This same trade over this down move, final down move before the up move, right? If you took this, stop loss below here, take profit here, 0.8 RR, or maybe like halfway, let's say half. So I showed you guys half, right? 2.4 RR. You could do that, and you can be successful doing that. That's fine. But we wait for those higher things, and we understand how to wait, and we understand how to get involved using Wyckoff, the mentfx block, using normal order blocks, stuff like that. Or again, what could you have done? You could have had an order already sitting at the open of this order block because you didn't want to miss it, right? So you might have, or 50%, up to you, and you could have been a buyer here, right? Structure finally breaks right here, so you would have most likely been broken even at this area. So you see price never comes back, which is great. Partials at that same area, 1 to 5 instead of 1 to 17, right? And now you can hold those for what? Potentially, let's go back to the daily, right? For potentially new daily highs to be met, right? Just like that at 1 to 20, right? And now that trade becomes not semi, 1 to 20 is very good. Retail doesn't even make that in in their entire lifetimes, right? Okay, I'm sorry, I don't mean to shit talk retail, but when I do shit talk retail, for a lot of you that don't understand, it's shit talking the retail that don't know what they're doing. It's the emotional retail. There is retail that is very successful, and in reality, what we do is retail trading from an institutional perspective. That's all we're doing. So for those of you that got mad at me a week ago for that, there you go. We're really retail traders, but we specialize and we do it a lot different than most do. And when we talk about the ones that are getting liquidated and are okay with tiny RR trades are usually the ones that trade emotionally and don't understand how they're actually trading. So there you go. Thank you so much for tuning in. Thank you so much for watching. I hope this video gave you guys a little bit of a look into how we can get involved on multiple areas of a chart markup and how we can use Wyckoff to get involved on those. And hopefully this will aid you in your trading. I know that a lot of people in the mentorship are doing fantastic. We had literally insane RR weeks from a bunch of different users, a bunch of different clients this week alone, even on this last day on different pairs as well. And although I can see those live, I don't know exactly how a lot of you on YouTube are doing. I know a lot of you have reached out to me and shown me, so I'm really happy to see that. But most importantly, I'm happy to see that everybody in the group is enjoying the group and is actually learning from the group. I look forward to talking to you guys in the next video. Thank you so much for watching. This is mentfx, and I'll see you guys next time. Thanks, guys.